Right, hello everybody. Welcome to today's podcast. My name is Adrian Boothie. I'm the head of trading here at Trend Signal, and as ever, I'm joined with Jerry Miller, our chief analyst. Hi, Jerry.
Morning to you all. Hello, hi.
So it is the 24th of August 2020, and in today's podcast we're going to take a look at really what's been happening over really since last time, and look at some of the main events. We'll look at what's been happening on the markets, the changes that have taken place over the week, and I guess a bit of an in-depth look into really what's been driving the stock market as we move into new sort of record highs in the US. So, but perhaps it's not all quite as rosy as it may seem. But Jerry, why don't you kick us off with a bit of a summary of what's been going on?
Okay, yeah, fine. Record highs in the US. I'm sure you've all seen the headlines. The S&P touching another record high. I think it was Tuesday last week. At the same time, Apple hitting $2 trillion. It is extraordinary. I mean, we can talk about the whys and wherefores in a second, but those were the headlines. And I think, as we discussed before in these workshops, these podcasts, that a lot of it defies a lot of bearish traders' logic, and those people tend to sort of forget that the stock market is not the real economy. And when you see all these headlines, you think, well, hang on a second, how come all of this is happening with collapse in gross domestic product, all sorts of people being furloughed and made redundant, when the stock market's going through the roof? And the answer is, well, the economy can misfire, you can get really poor data, but if the participants think that the outlook for shares is positive, they'll buy.
Well, we've discussed as well the fact that there's very little sort of alternative for investors at the moment. And can you just explain, there'll be some new listeners since we covered this last time, Jerry, but what does that mean? There is no alternative to the stock market?
Well, for most people, you can't invest in sovereign bonds. Some people might invest in corporate bonds, but the returns are nothing like the returns that you get investing in shares. And that's really what the central banks are wanting investors to do. They want money to be put to work. They don't want it to be saved. And a lot of the returns it will get on bonds, especially if you buy sovereign bonds and hold them to maturity, you're going to be guaranteed a loss of capital. So they're actually giving a negative yield or a negative return. So what we mean by there is no alternative, the only place to put your money, apart from shoving it under the bed, leaving it in a bank and getting no interest on it at all, really the only thing you could do is put it into shares.
Yeah, and we've seen, last week was a bit down. Just to give us a bit of a run through, but some of the indices were down last week. The S&Ps was up, Dow unchanged, but there's a very different picture within that stock market, wasn't there, Jerry?
Yeah, that's right. I mean, it was it's a bit of a sort of a mixed bag, really. The European markets had a bit of a tougher time. The FTSE was down 88 on the week, which is about 1.5%. DAX down 136 points, just over 1%. And in the Far East, the Nikkei, for example, that was down 370 points, which is just under 1.6% down. And the reasons being, a lot of it's down to sort of currency related issues, but also European markets suffered from some fairly poor manufacturing and services PMI data, Adrian, that came out on Friday. And actually the UK, wow, a bit of a standout.
I was going to say, not all of Europe, that's
right,
for sure.
That's
we were right, didn't we?
So if you look at the calendar so you can see it's the Eurozone wide numbers.
Yeah. So that's these. So it's 51.7 versus 52.7 expected, and on manufacturing and services below, quite considerably below, and yet we were quite considerably above in our services. That's odd, isn't it?
That's right. But we've come from an even lower base. The UK is suffering probably one of the worst contractions in GDP across the G7, mainly because of the way our economy operates. It's very consumer driven. Consumer spending driven, as it were, and it's recovering sharply from those depths, and that represents those recoveries. So 60.1, it's a massive jump in services. Compare that with the Eurozone, 50.1. It definitely a bit of a miss there, and I think that's what sort of softened the euro at the end of last week, which is not surprising really. But you've also got
Do you think the sort of the infections, the increase in COVID infections in Spain, France, and perhaps Germany as well, do you think that's having an impact on that data?
I think it's starting to impact it, certainly because
There's always a
obviously
lag on
that's,
these things, isn't there?
yeah, that's right. So we're talking about July manufacturing and services data, and at the beginning of July it was all quite okay, but things have been picking up over the last month. So what are we now, the 24th of August? So really in the latter part of July, early August, things started to sort of climb, and now they are starting to worry the authorities somewhat. So but you have got regional lockdowns, and I think that'll start to impact some of the economic data, and it's a little more worrying especially as we're seeing the schools going back, and um,
Mm.
I, I guess any further general lockdown measures are eased. So at the same time, whilst we're having regional lockdowns, we're having the general lockdown measures eased as well. So they're not mutually exclusive. You can have both of them happening at the same time. But I think that's what's of a concern. And the
Yeah,
infection.
I think one thing that I read in the UK about schools going back, which I have an interest in for my kids, and it's saying that there might have to be a bit of give and take. If it's starting to increase, they find that kids going back to school is extremely important and a priority. So they will go back to school, and they may have to close something else down elsewhere in order
Yeah,
to allow for the kids to go back.
yeah.
Um,
Well, it would be
Difficult decisions.
madness. Yeah, it'd be madness to close schools and let people go to a cinema, for example, or go to a pop concert or whatever they're doing. I mean, no, I think we discussed that before, and I think that is very important.
So we've had the Dow have a bit of a rally since the beginning of this week, really. So big had a jump up, had a bit of a buy signal on Friday's close, and here we are, good sort of about 250 points rather up since then. Why are we up this week on stocks, Jerry? So far, I say this week. It's only Monday
I
morning.
think, well, so far this morning, it's on the back of sort of more positive uh, outlook. They're looking forward to this thing called the Jackson Hole Symposium on Thursday and Friday. This is when all the central bankers are getting together for their, well, what is turning out to be a virtual reality, or whatever you want to call it, remote online gathering, but it's still called the Jackson Hole Symposium, and that's sort of exciting them. And the markets actually, so after the European market shut on Friday, the US markets really did power ahead. And I think that's what's
Yeah.
given a bit of impetus to the whole thing. And then the Far East Hang Seng, they get all quite positive, really. So it's given a good start to the week.
I noticed that there's been read an article about Trump approving some sort of drug approval trials or something like that. I have to read a bit more into it, but so being really pushing the FDA in order to approve something there. So I guess he's having to probably make some quite pushy calls to help push himself back up the polls, isn't he? Because
What we've all got to realise is that we've now got about 9 weeks to go to the presidential elections on the 3rd of November, and he's going to try and do anything that he can to frustrate the Democrats and also give himself a greater chance. And one of the things he's talking about is basically changing the rules so that the vaccine developed by Oxford University and AstraZeneca can be made available in October, a month before the election, to the US, so that they can start inoculating people. He's looking for some quick wins ahead of the election, and he'll do anything he can. I mean, he'll literally do anything he can.
I listened to something fascinating last week, which was talking about Biden and his history, because I think he's tried to run for presidency or the party nominee 3 or 4 times now.
Yeah.
He's been defeated a number of times at various stages, and a lot of the sort of defeats that have come through have been more about his sort of positions. So various times over the last sort of 20 years, people have wanted something different. So Trump was almost anti-establishment, anti the political establishment in a way, wasn't he? Whereas now the argument is people like the idea of Biden because he's a very safe pair of hands. He's a politician. He's been in this for, I don't know, 50 years or something silly, and he really knows what to do in a time where with COVID around, they probably need him perhaps more than ever, is really what it's thought of. Whereas in times when he went up against Obama, that really wasn't the
ideal
view that
candidate.
people wanted at that time. People wanted something different, something fresh, something new, which was not what Biden represented. Whereas perhaps that is what people want now. It's interesting.
Ironically, Trump will probably make an attack on that and be accusing Biden of being a career politician, which effectively he is. He's been in Congress since 1974 or something like that. So, but I do sense that the Democratic Party are a lot more organized, and there's a lot more unity this presidential election than was 4 years ago. And I think Trump's got his work cut out. 8% down in the polls. A lot of these, what the so-called key battleground states, he's struggling. So he needs anything to disrupt the whole flow, the trend at the moment, and he'll do what he can. And this the Republican National Convention that happens this week will be quite interesting to see. I mean, I just expect the unexpected is my mantra. That's for sure.
Yeah, exactly. Well, especially with Trump at the helm, that's for sure.
Yeah.
Okay, what about the FX markets? Euro dollar relatively unchanged, pound pretty unchanged against the dollar as well, Jerry.
Yeah, although the euro was quite steady early on in the week, but we had some, relatively disappointing. Well, if you're in the markets, disappointing news from the Federal Open Market Committee. Their minutes basically sort of pulling back from more monetary stimulus, which caused stock markets to wobble on Wednesday evening and Thursday. Consequently, the dollar also recovered a little bit. So you've seen a little bit of a rebound in the dollar against the euro. But look at it today. The dollar is giving ground again. The euro's catching, certainly covered half its losses from Friday already.
Yeah. Okay, commodities, Jerry.
Well,
gold had a sort of interesting mood as well again.
Another bout of profit taking, but not on the sort of same level of a week previously when it had its biggest dollar fall, not percentage fall, but dollar fall in its history. We had another move on Thursday, on Wednesday. Was it Wednesday? Wednesday. And that was the same reason, really, a bit of profit taking. But each time you see these falls, straight back up again. It fell on the previous Wednesday, back up again. Fell last Wednesday. There's no follow through, and so my own view of gold is that whilst I'm not a massive fan of it, it does remain pretty well supported, Adrian, in any sell-off, at least for now.
And oil is just almost eerily tight ranges at the moment. It's barely worth talking about right now, isn't it? You look at some of these,
pretty much, and that really is. I mean, you're looking at a 4-hour, but on the daily, it's even more sort of range bound, and it's just wedded to the fortunes of the stock market. And I think, if anything, perhaps the rising tide of infections in Europe eventually might have an impact. But for now, they don't seem to have dented the oil price as much. But then again, nothing seems to spur them on either. So we're in this sort of, I don't know, it's not the most interesting market at the moment.
No. What is interesting is something we wanted to just talk a little bit about today. We've got a couple of minutes before we have to finish off, Jerry, but we talked about market breadth. The subject for today's session was all your eggs in 5 baskets. This is all about the tech stocks and the S&P hitting a record high, Jerry. Do you want to just give it a bit of a summary there?
Yeah, it's extraordinary, isn't it? So a record high in the S&P 500. That's the big main index that everyone follows. It's the 500 top companies in the United States by market capitalization, i.e. what they're worth, what their capital value is. And well, the stock index has performed incredibly well since what I call the COVID-19 swoon in March. And last Tuesday, as I mentioned at the beginning of this piece, markets closed at a record high, but have since surpassed that level, as we've already discussed. But it's worth looking at in more detail at the sectors and stocks which have propelled this advance. The tech heavyweights, and you know what I'm going to say. We used to call them the FANGs, FAANG. The N for Netflix really should be replaced by Microsoft. Those 5 stocks account for nearly 20% of the market capitalization of the whole S&P 500. So out of 500 stocks, you've got 100th of them account for 20% of the index. So Apple shares, for example, we've talked about them hitting a value of a whopping $2 trillion 2 years after they were valued at $1 trillion. And as you quite rightly pointed out, they dipped below $1 trillion in March. So they've doubled since then. But it's an extraordinary feat. And they're notable for being the first company ever to achieve, a $1 trillion valuation. But more interestingly, since this COVID swoon, these stocks that we've talked about, the FANGs, these top 5 stocks, they've rallied significantly in the first 7 months. So forget about,
So that includes the fall, doesn't it?
So I'm talking about since the 1st of January, these top 5 heavyweight stocks, tech stocks, they have rallied a collective 37%. So that's on average. Their market cap's gone up by 37%, while the rest of the constituents of the S&P 500, i.e. the other 495, are down 6%. So we might be making a record high, but the majority of stocks definitely are not. And, there are problems with it, of course, because, when you look at the detail, you now know why many analysts refer to this as a very crowded trade, because, to have made money this year, you'd have had to, certainly in the US, if you were in the US and only investing in US stocks, you'd have had to put a significant lump of your investment pot into just 5 stocks. And that's
Tesla.
And Tesla, that's a very good. Well, Tesla, strictly speaking, is not in the S&P 500 until it's.
Isn't it yet?
It's had 4 quarters of profitable results, but I'm not sure whether it has been included. But if it is included, it might well be, oh God, I know, there's going to be a T in it. I'm not sure what sort of acronym that's going to come up with, but I shudder to think. But anyway, talk about investing just in 5 stocks. Most financial advisors would definitely never advise you to do anything like that for obvious reasons. And actually, there is a counter argument to do that. And what do the bulls say to all of this? Many of the other stocks in less affected sectors, i.e. as long as these stocks aren't in leisure, travel or tourism, they're probably undervalued compared to these stocks and have some catching up to do. And I would probably say, oh no, I'd just be a bit worried about the FANGs falling, to be honest. I mean, it's interesting. And then I know we've got not much time left, but there was an article in the FT this morning that's highlighted how one way this sentiment is now, because bets against US stocks, and that's where investors or funds, hedge funds, they'll borrow stock and sell them, looking for a fall in the market. And the number of bets against US stocks, and this is measured by what's called short interest as a percentage of the market capitalization, it's dropped to a 15-year low. So there are very few people who are betting on a fall in the US stock market. And as I've mentioned to you, Adrian,
sounds like a good time to short it. Let me get to my trading account quick.
It's a warning sign if ever there was.
Yeah, the contrarian trade is often the right one. Let's face it.
Yeah.
Fascinating times in which we live, that's for sure. Jerry, I think that's pretty much it, is it? Anything else?
No, that's it. Well, I could talk forever, Adrian, but yeah, that's enough for this one.
Okay. Well, we're going to come back in a little bit later on, and we're going to do our review of the events for the week ahead. So still quite a few things for us to sharpen our pencils for the week ahead, various economic updates, and of course the Jackson Hole Symposium, which Jerry mentioned earlier. We're going to talk about that a little bit later on the trading review podcast in a second. In the meantime, there is an even bigger event, or 3 bigger events coming up this week. I say firmly tongue-in-cheek, because we're hosting a few live events this week, which you'd be very welcome to attend. In these events, we'll be teaching you some of our trading strategies and how we take our new foundation students, teach them some rules to help them identify some great trading opportunities on the FX, index and commodity markets. And if you'd like to come along and help boost your trading results by learning 3 simple steps for identifying high probability turning points, then make sure you come along to one of these live events. Like I say, we've got 3 coming up this week. You can go to our website, short link here, bit.ly/learnts, so bit.ly/learnts. Go to that web page there, get yourself booked in, and we'll look forward to seeing you online. But otherwise, everybody have a great week's trading for myself and Jerry, and we'll see you next time. Bye-bye for now.